Welcome to Momentum Monday. Today is Sunday, March 31st. Is that an orange?
It's a grapefruit. I'm in Phoenix, and it's been a perfect week. I'm going to try and make everybody dizzy. Is it working, Ivan?
Sure. I mean, can you do it with 3?
Hang on. No, can't even do it with 2. I was never good at juggling. Can you juggle?
No, I can't. It's a special skill.
Welcome to Momentum Monday, everybody. It is almost April 1st. Have any April Fool's jokes planned?
I'll figure it out tomorrow. There's enough time.
Okay. Ivan has some good news. He passed the Series 65. Is that public? Well, now it is.
Yeah, sure.
As usual, you are just so excited. Okay, it's Sunday night, March 31st, and welcome to Momentum Monday. Ivan, let's get right to the markets. Do you have a special hello to anybody? Anybody in the hospital, Ivan? Anybody you want good wishes to?
Yeah, on Twitter I noticed that Sarah Filtrate is having some health issues, so we want to wish her a speedy recovery.
Sarah?
Yeah.
Get on Twitter more. Uh-oh. Is she going to be okay? I'll have to go watch.
Hopefully, yeah.
Is okay. Well, Sarah, best wishes. Met her a couple times, and that's terrible news.
Yeah.
Okay. Good wishes, and let us get to the markets. Wow. December, what a fake out that turned out to be.
Yeah, absolutely. I mean, we continue to see the dips bought furiously, especially in large caps. I mean, definitely US large caps look so much better than small caps. It's a night and day difference.
Looking at the NASDAQ 100, Ivan's using MarketSmith, as we use every week, a sponsor of our charts and data for the show. This is the NASDAQ 100 everybody's looking at, and you can just see December was, well, I mean, we haven't hit all-time highs, but that is one hell of a panic, and now it's on the verge of a panic to the upside.
Yeah, I like that tight range construction. Look at those 2 weeks of really tight range.
Tight range, new leadership. Ivan, if we looked at Fashology, my 3 fashion companies in my 8 to 80 list, all having great. I mean, Lulu being the strongest, but Nike hit all-time highs this year. Pulled back on this earning, but still in a tight high base. Obviously not a serious growth company, but we can just see Fashology. And the other thing that looks interesting are restaurants, from McDonald's to Starbucks to Chipotle's. Those are big restaurant companies.
Yeah, absolutely. Yeah, absolutely.
So
they're doing amazing.
McDonald's made the biggest acquisition ever. Chipotle's was written off. Has been the strongest restaurant stock of the last year, and Starbucks. So we're talking 3 American behemoths in the food and beverage industry, with Starbucks leading. So these are brands that Americans use every day. Maybe not Chipotle's quite yet, but survived their PR and food blunders. So that's new. Those are large cap. I'm long McDonald's, by the way, and they made a big logistics software acquisition this week. I don't know, $300-400 million acquisition. So I mean, that stock's been what, in a tight 20-point range for 2 years after an incredible run from 08, from the bottom of 08. And wouldn't be surprised to see restaurants continue to lead, just because of international. So that's restaurants. We talked about Lulu. If we pull Lulu back up, yeah, it's been. You can just feel this company kind of get to the next level. the market cap now being, a large 22. This is no longer a small company. This company is going to have to continue to shine. But I think there's so much growth in e-commerce and stores for them. Ivan, what looks interesting to you?
I mean, as I said, large caps are definitely currently looking a lot better than small caps. Let me share a chart of the Russell 2000.
Oh my goodness, yeah. Small caps are lagging.
Still kind of struggling below its 200-day moving average.
I think that's the financials. Even though rates are dropping, the financials.
Oh, yeah. Well, rates dropping, that's actually negative for financials. Yeah, they're definitely pulling down the Russell 2000. The good news from Friday is that we finally saw biotechs waking up a little bit.
Just a little bit. If you've owned the right ones, it's been a great couple of years. But otherwise, the big caps have struggled. So I'm just avoiding those. ARRY being one that kind of continues.
Yeah, definitely. They actually try to break out on Friday. And, what is that, new all-time high? So yeah, definitely one of them, one of the biotechs that is looking really good.
Mm-hmm.
And this one also, Arrowhead Pharma, had a nice, beautiful pullback in the last few weeks to its rising 50-day.
Yeah, that's stuck to its favorite AMRN.
Oh, AMRN, yeah, definitely. This one also looks very constructive on multiple time frames.
Yeah, I have no idea what they do, but they're kind of breaking out.
Definitely in a good market, it can go to 40 this year. So, but it's also very, very volatile. So let's take a look.
Okay, I see it. It's just in a base still. Okay, yeah. But there's been a lot of stock twits banter about that stock. Okay, so small caps are lagging. Could be the financials. Should be the financials, right? FinTech. Yeah. I mean, state of the times, Goldman Sachs set up a financial, or Goldman Sachs, as I refer to them, set up a financial ETF and has no banks in it. So I don't know if that's a sign of a top for the financial service lookalikes like PayPal, Visa, MasterCard. Is that what they called it? iPay?
No, that's a different ETF. I don't think they have any banks. It's just digital payment providers and software. And as you can see, it's doing a lot better than the financial sector.
Are there international stocks in that, like STNE and PAGS?
I assume so, yeah.
Okay, so that's interesting. iPay. Okay, but yeah, I thought what was interesting is Goldman launched an ETF for finance without banks. So don't know if that's a good thing or a bad thing. It's just something, a data point that feels like Goldman, piling their clients in near a top. So be careful, I think, with payment stocks, even though they still look great. PayPal, STNE, Visa, MasterCard. Pull them up quickly, Ivan. I mean, I'm long PayPal. I don't know how you aren't long PayPal. MasterCard, obviously, I don't think they offer great exits right here, but we've been long these. PAGS is one that we own a few shares speculatively. Square, I feel, is the weakest one in the group. I can't put my finger on it. I had a great couple-year run. I just don't think they have an international plan yet, but they have the market cap at 30 billion to do a lot of acquisitions. So I think Square's got to go and start doing. They got to start thinking about an international plan or look to sell, because the competitive market of being in restaurants and so many failures in restaurants. The thing about it is there's so much growth in that industry, but there's also so much, just like American business, 9 out of 10 business fails. So most retail businesses fail. So, Square's clients still go out of business. So I think some of that luster's come off that hardware, software storefront angle. And when it's not and I think that's where you're seeing, combined with the CEO leaving, I think Square's been the laggard. It's still 25% below all-time highs when the other payment companies. So I'd be careful for people, unless they really understand the Square story. I think Square needs to, it just feels like it feels a little bit behind in that space. Can't put my finger on it. Okay,
yeah, I think it needs to clear 80 to get some upside momentum going on, and it's kind of setting up a bear flag. So in a weaker market, it could easily,
in a weaker market, this would be the one that
go down 50%, I would say. But we're not in a weaker market right now, so
no. But don't chase laggards in a strong market. Go with the strength. And so let's go pull up first few names in the SL, the Market Wisdom 50. So Ivan and I have a product. It's called marketwisdom.com. If you're a former Peloton subscriber, give us a buzz. We're giving a discount of $250 for your first year. Ivan put this together. Here's about 50 stocks a week in a good market that make our list. We have data here that no one else has, pulling from StockTwits and screens that we pull from Momentum. Stone, that's interesting, Ivan. Stone first week on the list, kind of front run that.
it'll be hit second week, actually.
Second week?
Yeah, that one means it's already been 1 week on the list, and it will be second. New means it just joined the list. And
yeah, so Workiva, another kind of a SaaS product. We see Zscaler's been on there. The one biotech company is Unicure. Workiva's just been in a great trend. Doesn't interest me. I've got enough SaaS stocks. Go back to the list. So we can see Twilio's been on it the longest, at least of the ones that we're going to share today. 48 weeks on the list. This is what gets us excited about how we do things. It allows us to find companies in trends, apply our own catalyst type knowledge to these, and we're looking to own. I'm looking to own stocks for 2, 3, 4 years to catch the meat of these moves, and it takes just a couple of these. As long as you apply some money management on the downside, you just need a couple of these in your portfolio every few years to make it. And obviously Twilio up 200%. And I own some, full disclosure, I own some, and so do all the subscribers of Market Wisdom, some Stone in the low 30s, and it exploded higher. So Zscaler is one that I missed. That's been on the list now 16 weeks and up 75%. Anything else stand out to you, Ivan? So restaurants?
So there are quite a few decent setups, and if the general market doesn't dump next week, I think it will be a really good swing trading environment, because I see really a good amount of setups right now on the long side.
Okay. The last thing I want to talk about is IPOs. I think Fred had a great post about Pinterest. If you pull up adamvictorcharlie.com, Ivan, let's explain what's going on here, because I think he does a great job of taking apart Pinterest S1. I think going to VC, scroll down a little bit and reading how they think of that was actually interesting too, about how he uses Apple TV. And I think Apple is completely still misunderstood around TV.
This one?
Yeah, more S1 fun. Takes apart the S1 in a very high level way of Pinterest. And you can see the most interesting story. And this is going to be the case for a lot of American software companies over the next 5-10 years, is international. So you can see they're a consumer company. My wife is starting to use Pinterest a little more. It's showing up higher on Google results. And you can see, they're going public now while the US market is rather mature for the product. And you can see this is so fascinating. You can see the international growth exploding, but you can see international revenue just basically, as Fred says, nascent. It's really buying this IPO is a bet on them being able to monetize, continue to grow monetization on a stalling user base in the US, maybe do some acquisitions with their stock now, but they've got to figure out international revenue. And so there's a lot of risk in these new IPOs. They're fully priced. These are mature You know, in the old days, in the 90s, this would have gone public 3-4 years ago at a $2-3 billion valuation. I think it's now over $10 billion. So you're going to see this a lot with Lyft. We saw it on Friday. These are I think the company's going to lose $1 billion this year and has no idea how they're going to get profitable. Now, what's interesting about Lyft is their gross profit per ride. Even if we go to the Lyft IPO, is like $1.50. So every time someone gets in a Lyft car, the gross profit's $1.50. So with Lyft, there's kind of a bet on. I mean, I have no idea how they're going to, eventually get down the SG&A to a point where that gross profit works per ride. But there is a possibility, and you can see here that the bankers had a field day with this. Hit 90, closed at 78. I think you're going to see this with a lot of these IPOs in this market. And this is what we have to be careful of. Everybody's going to try and get public quickly. After seeing what happened in December, if we go back to the S&P, Ivan. The danger I see here is that December reminder was, got the attention of these late stage unicorns. And every day right now is a rush to get these companies public. I think December really woke people up. Government shutdown, some craziness with the White House, extra craziness from Trump. You didn't, and people are realizing like this is the moment to get public. So we are going to have a lot of supply coming onto the market over the next 3-4 months. I would be shocked if we move much higher on an index level as the markets kind of deal with supply. And but anyways, I think individual stocks, you have to take entries as you see them, as long as the market continues to just kind of chop and stay above these levels. So the way
in TIC in general, the number of publicly traded companies has declined substantially.
Sure.
In the past 18-20 years, so 10 or 20 new issues are not really
10 or 20 issues
break
at
the market
at $20 to $50 billion though, Ivan. That's like thousands of IPOs from '99. So I mean the numbers are staggering. Uber is going to be 80 to 100 billion. So these are not small IPOs. But I hear you.
Personally, I think that the best time to buy an IPO is right after a major market correction, because of their small floats during market corrections, those IPOs go down 50 to 90%. And after that, during the recovery, they can quickly double and triple. And we saw even that with the most recent market pullback. This is just one example. There are at least 10 others with IPOs that had a substantial pullback in December. Look at this one, SMAR, Smart Street. They went from 34 down to 20, and they doubled after that. So this is the best time to buy them. And actually,
if they have good businesses, and there's an ETF, I have an IPO that people can track, which kind of has the hot new issues as an EPO, and you could see how it was down 40%. What was it in December when the S&P was down?
So it was around.
This is why
21. So it went from 30 to 31 to 21, 30%, 33%. 30%
2-month decline. Okay, that was a panic, and that's why you're going to see people wake up and go, wait a minute, it's not all. We got to take advantage of these moments when we see them. So I think you're going to see a lot of supply. And now if we can bust through the supply, that's very bullish. But this is an ETF that I follow, especially in corrections, because this is how you can tell. And then you can go look for individual you can go to Koifin, Ivan, and type in this ticker, correct? And see which.
Yeah, sure.
So let's go to Koifin, for example. You can go track which tickers are part of this IPO ETF, which is a Renaissance. Great product. Renaissance has great research too, and they're on StockTwits. But if you go,
give me a sec. And Let's add IPO.
There you go.
3 months. All right, actually, these are ranked by 3 months performance. So we have Stone, Roku, SE, which is a Singaporean
Guided Health, yeah.
Digi2 game. GH, another IPO that got
Guided Health, that was a hot deal. SoftBank.
Carvana, MDB.
Oh, no one.
Oh,
okay. Who yet?
We have some Chinese stock, AVAR.
Yeah, so this tracks like, so this is a great, I mean, this is a great ETF, to be honest, if you're too lazy and you want to track IPOs. So what Ivan says is, in market corrections, recent IPOs, hot IPOs, are where the panic sets in first.
Absolutely, they go down 50 to 90%.
It was down what, 10, 12%? This index was down 30% in December. So
this is where the opportunities are in the initial recovery stage. This is where you can, get 200-300% return in a quarter.
Yeah, this is a really ingenious ETF. There's just some ETFs that are just well done. This is one of them. Okay, Ivan, have a great week, everybody.
Right.
If you want to subscribe to Market Wisdom, hit us up. It's quite easy. All right, Ivan, have a great week.
You too, Hart.